Today, I'm going to make all of your outside directors unhappy. I am going to answer the question, can you withhold taxes for outside directors? Unfortunately, for the directors that want you to withhold taxes, the answer is usually no. But there is a subset of directors for whom you are required to withhold, and those directors probably do not want you to withhold. Before we get to that, however, first you might be wondering, why would directors even want you to withhold taxes? And this usually comes up in the context of restricted stock awards and restricted stock units. The directors want to use shares to cover their taxes, but they don't want to sell their shares on the open market and make an estimated payment to the IRS. What they want is for the company to just withhold some of the shares from their award and then apply the value of those shares to their tax liability. And in that circumstance, there's really just no mechanism in the tax system for you to collect and deposit taxes on the director's behalf. The system is just not set up for you to withhold taxes from non-employees. One thing you absolutely cannot do is add the directors into payroll and deposit their taxes along with all of your payroll taxes. If you do that, it is going to look like the directors are employees. And the problem with it looking like the directors are employees is that then it looks like they're subject to FICA. And directors are not subject to FICA. They are subject to self-employment taxes. So if you try to if you try to withhold taxes for the directors and then deposit those taxes with your payroll withholding, that is going to just create a big mess that you are eventually going to have to unwind. And in fact, I am aware of some companies who have paid penalties to the IRS for doing this. If that is not enough to convince you, in the circumstance that I just described, where the directors are asking you to withhold shares to cover their taxes, that will trigger liability accounting under both ASC 718 and IFRS 2. Under both standards, if you are withholding taxes and using shares to cover that withholding in a situation where the company does not have a statutory mandate to withhold, that absolutely triggers liability treatment. Most companies simply do not want to take on that liability, which means that once we get to this point, the answer is usually no on tax withholding for outside directors. But like I said at the start, there is a subset of directors for whom you are required to withhold. For this requirement to exist, 4 conditions have to apply, and all 4 have to apply. So let's go through them. The first condition is that the director is not a U.S. citizen and not a U.S. resident. The second condition is that the director serves on the board of a U.S. company. And the third condition is that the director performed services for the company while in the U.S., which means in this case, the director traveled to the U.S. to maybe attend a board meeting or a committee meeting. Just attending a meeting via Zoom is not going to trigger the tax withholding liability. The director would have to actually travel to the United States. And then the fourth condition is where it gets a little bit tricky. There's no tax treaty that exists between the United States and the country the director is a resident of that would exempt the director from tax withholding. The first 3 conditions you likely can figure out on your own, but this fourth condition, you're probably going to need your tax advisors to help you with. If all 4 conditions exist, then the income that the director received that is attributable to the services they performed while they were in the United States is subject to tax withholding. There's a special rate for this. You have to withhold at 30%. You report the income on Form 1042, which is filed with the IRS, and then the director files Form 1040-NR at the end of the year. And I have to believe that the directors in this situation are really not excited about you withholding taxes for them. Which means we have now achieved my goal. All of your directors are unhappy. You cannot withhold taxes for the ones that want you to, and then for this little subset that you have to withhold taxes for, they probably don't want you to. Now, I am sure you have questions, and I have a host of resources that address the topics in this video on the NSPP website. Be sure to check out the links below to learn more. And if you enjoyed today's video, please subscribe to our YouTube channel so you are notified when we post new videos. Heck, if you didn't enjoy the video, subscribe anyway. Maybe you'll like the next one. And thanks for watching.